Hello, everyone. Welcome back. Yes, it's Chris G here, and today is another episode of Hard Hat the CEO. And um, I have a fun guest today. I think because I love uh, investing, I love selling products or selling businesses and so forth. And this gentleman's been kind of doing it all, and his name's Eric Malka. Eric, how you doing?
Good. How are you?
Fine. I'd like to talk today. You guys will learn about. I talk about investing in other money trees other than your business. Once you become that CEO and create all kinds of orchards of money trees. And I'd kind of like to talk to Eric today. Eric, can you give us a little background about yourself?
Sure. I'm a serial entrepreneur. Started my career um, early in my life after quitting college at the age of late 17.
Yeah.
Moved to New York City in 1985 with no green card, undocumented immigrant with little cash and little education. 24 years later, I sold my company to Procter and Gamble, and during that journey, which was a lot of fun, I've learned quite a bit of things that I'm trying to share with the next generation of entrepreneurs to avoid some of the pitfalls and maybe increase their odds of
Sure.
success.
For my audience, Eric and his wife, Miriam, right? Did I
Yes,
pronounce that right? They owned the, make sure I get it right, the art of shaving. And
that's right. The art of shaving.
I'm intrigued by that because you've taken something that I've been doing since I was in eighth grade, but been doing for years, and you made it something different. Can you tell us a little bit
That's
about
right.
that?
Oh, sure. My wife and I were very young, but we got involved with the industry of men's grooming. Started discovering these old-fashioned British brands that were selling shaving creams and brushes, and I thought that that concept would do well in the U.S. And my young girlfriend, who's now my wife, was very talented. I discovered slowly but surely, and was able to really design a beautiful store environment. And together we reinvented that concept for the American consumer in the mid 90s. We modernized it, if you will, kept
Hmm.
some of the traditional elements, but brought some modernity to it and really catered it to the American, especially the New York consumer at the time. And little did we know, we struck a chord with the American consumer because, first of all, shaving is a highly masculine ritual that date back to the caveman era.
Yeah.
Um, it's also something that's very emotional because, we heard even in the first days in our company, we heard customers coming in and expressing how they remember their grandfather or their father shaved with a straight razor and this and that. Or I went to the barbershop the day I was married 35 years
Or
ago.
had another brush and used to soften up their, yeah.
Exactly. So there was an immediate connection, emotional connection with the past and with something that was deeply masculine. Um, so we elevated. This was the era where aspirational marketing was a big thing in the 90s and early 2000s, where consumers started to trade up in many categories to pay a premium for a premium product. Some of us cannot afford a Ferrari, but we can afford, the shaving cream that that person uses. So, these were elements. But on top of that, we really delivered high quality natural ingredients and a shaving system that delivered the perfect shave. And I think when you combine all these things of benefits of the products, the experience of the ritual, the emotional connection to the brand, we struck a chord, and we were rewarded by consumers with their loyalty and their business.
It's kind of like Starbucks, where they took something that's been around for ages, coffee, and then make it into where it's three times probably what it's worth. As
It's
far
it's
as
an experience, right?
yeah,
I think Starbucks called it your your home between your office and your house, right?
exactly. Yeah.
And it's the product has to be good quality. You cannot just sell an experience alone. You
Hmm.
need to have the quality. The quality is really the rational mind saying yes, go ahead and make that purchase. But the emotional is what you're selling, what you're appealing to in every category. And
Gotcha.
Starbucks, Apple are great examples of that. We didn't realize we were doing that because we were just doing what we thought was the right thing.
Sure.
We had good instincts and we kind of struck oil, right? We were digging for water and we struck oil. So sometimes good instincts go a long way, and we created that experience for the consumer.
Well, let's say I had an idea. How do I test to see if it's valuable? Viable. Excuse me.
Well, first of all, I really stress to people, entrepreneurs especially, that ideas are really simple.
Hmm.
It's really, 99% of the success is in the execution of the idea itself, right?
Yeah.
Um, Having a, starting a shaving company, opening a shaving store, that was not a brilliant idea. I mean, I saw a dozen of them in London, and, I thought, hey, that's a good idea. But the way we executed it, unique to our talents and to our sense of how to bring that idea to life, was really the magic. So how to test it? First of all, testing should be done in very small scale. You
Okay.
know, if you can sell to 10 customers, you can sell to 100. And if you sell to 100, you can sell to 1,000. If you sell to 1,000, you can sell to 1,000,000. I mean, there's just no two ways about it. Unless you're selling something so,
So
niche that
specific. Yeah.
nobody needs it. But I would test. I always recommend starting small and thinking big, right? If you can validate it under a microscope, then mass produce it, right? It works in the lab. Now bring it into mass production. So start small and validate your idea before you really run with it. And very importantly, focus on the execution, not the idea. It's really the details. It's really how you bring this idea to life that makes a big difference.
So you have an idea. I got not an idea, but when starting out, you generally, we do have an idea of what you're looking for, that avatar customer. For example, in shaving, you know that you mainly will talk to men. In this particular case, if you're shaving your face, um, so for those 10 people that you first sell to, you have an idea. You could go target them, see how it works, make some
Yes.
adjustments and so forth. And once you kind of get that to where you want it, then you continuously try to find more people just like that demographic, right?
That's right. I mean, there's many elements of building a company, right? Your pricing strategy, your product quality, your people, your process, and most importantly, I would think, is your target consumer. The more you understand that target consumer, the better you can be at marketing efficiently to that customer, and most importantly, serving that customer. What understanding their needs. If you understand really clearly who your customer is, you can understand their needs, their challenges, and how to best serve them.
Before you got into the shaving company or decided to go that route, did you guys have other ideas, or did you brainstorm inside this
Yeah.
path to go? Or
Yeah, that's funny you asked. Nobody's ever asked me that, but it's a great question because we had many ideas. First of all, the art of shaving was my fourth business. So
hmm,
that's a little, by the way.
that's
Actually,
all
my
right.
wife, my
You learn
wife
from
and
those
I,
others. Go ahead. I'm sorry.
yeah, we were very passionate about health foods, and we were very passionate about teas. We're big tea drinkers, so
Huh?
we were toying with the idea of creating a tea company. That because in France, we used to go to a tea store that had thousands of teas with beautiful decoration that you can order and smell, and very successful company. We thought that could be a great thing,
Hmm.
or a second idea we had was to create like a very healthy McDonald's, with vegetarian meals and healthy options, and but at the end, it wasn't about the idea so much as it was about what was in front of us, right? I got a job in the shaving world in New York City that was importing products from England, and the opportunity was there, right? It's less about, people think I'm obsessed with shaving or I'm passionate about shaving, and as you can see from my bearded face, uh, I'm like most men.
Yeah,
I'm not obsessed or passionate about shaving. It's something I have to do, and it's better if I do it more comfortably and more enjoyably. But
I shaved
for
today
me,
because I was going to be on the podcast.
that's right.
Didn't shave
Uh,
yesterday.
People
Sorry.
think I'm the shaving police. Also, I'm gonna, arrest you for that stubble. But really, it was less. We were very passionate about the art of shaving, but not because of the category we were in, but how we infused our personal passions into the business. Our company culture, our quality products, our natural ingredients, our obsessive focus on customer happiness. Those were the elements that we were passionate about. So we became very passionate about the business more than what we were selling.
We're kind of limited on time today. I want to make sure I get all these good questions in.
No, thank
Um, when did you approach Procter and Gamble, or did they approach you?
Well, it was serendipitous, Procter and Gamble. And you ask really good questions, by the way. I do a lot of podcasts. I didn't get three of your questions I never got before.
Well, thank you.
Uh, so when Procter and Gamble bought Gillette in 2005,
Hmm.
it was to this day, it's still the largest acquisition in consumer goods history at $57 billion. So a lot riding on that. Their first major launch was the Fusion Blades, which was getting a lot of pushback in the press because, it was like the Rocky Seven, sequel. It's like, do we really need another
Yeah,
one?
another one. Why? Yeah.
Another a fifth blade? Come on, give us a break. So they were getting, the dialogue in the press was negative, and I challenged my PR team to go and get us a sample of the Fusion blade and razor before it came to market, so we could adapt it to our fancy handles. And when we reached out to them, they said, "Uh-huh,
No,
this
not
is
gonna
top secret, man. This is
happen.
easier to get like the Russian secrets than to get that from us." But they said you could come in handy because we think that if your CEO tests out the razor and speaks about it on television, it can go a long way to change the narrative that's happening in the media, which of course we agreed. Any press is great press for us. And next thing I know, I'm in a hotel room with PR people, and they allow me to shave with the Fusion razor, one of the few in the world to do that. They had to take my phone away so I don't take pictures in there. And I went on CNN Business to give my impressions. And who was watching? The president of P&G was watching this kid talking about his $1 billion launch. And who is this guy?
What?
Oh, he's the Art of Shaving. There's a fancy shaving company, luxury stuff. So anyway, that's how the relationship started. He sent a couple of his guys over to Miami, and we decided to collaborate on launching a high-end razor we call the Fusion Chrome Collection. We actually became the first company to ever be licensed the Gillette brand in the entire Gillette history. We're the only ones in the history of Gillette to have received that license. And it was a precursor to the acquisition, right?
Yeah.
The collaboration did so well in the marketplace that it led them to feel comfortable with us as a company, with us as founders, and with the business itself. So that led in 2008 to P&G asking us to be acquired.
Did you have help negotiating, like a lawyer or all that good stuff?
Unfortunately, I did. Unfortunately,
Yeah.
that was, you know, I call it on train to slay the dragon, because you get to the M&A, you get to the most important time in your career and you're not trained for it, and you're in front of professionals that do this day in, day out. So
Right.
my investors recommended I hired Goldman Sachs, which was my first mistake. They were way too big
Which
for
one,
me.
having investors or Goldman Sachs or both?
Both. Both.
Both. Okay.
Goldman Sachs just didn't take care of us the right way because we were such a small deal. I would have done better being with a smaller bank that would have given me a lot better attention.
Sure.
Next thing you know, we're dragging our feet with the transaction. Mind you, I brought the buyer, I brought the brand. We were on fire, we were hot. Just add water and stir, make it happen. But we dragged our feet. And by the time we got into due diligence, the financial crisis hit. So that was a real challenge. M&A was in turmoil across the globe. Markets were free falling. P&G stock was down 60%. Our sales were down 25%. We were heading towards insolvency. It was a real rodeo, let me tell you.
I know you've started another business, obviously, and that's helping others um, become entrepreneurs or take their products. Have you personally done any other new products since
Yes,
then? Eventually,
we work. I mean, one of the we're a very unique investment shop because we provide a lot of operational expertise, from the business elements, financial, to the science. My wife actually helps the brands we work with to reformulate or formulate products. So we're always creating new products. We also created a brand called Ingredients, which was 100% plant-based. That was one of our goals in life, was to launch the purest products the industry had ever seen, to try to encourage the industry to move away from petrochemicals in the personal care industry, which we feel are harmful to consumers.
hmm
That brand didn't do well. At the end, we realized that we're not suited to operate a business anymore. We're more suited to support young
coach. Yeah,
enterprises.
I hear you.
So we moved away from that, but we're still keeping that philosophy alive in our portfolio brands to clean up their formulations and support them in many ways.
Well, without getting into any non-disclosure agreements, can you tell any success stories of ones you've actually helped here lately?
Sure. I mean, we're working with a beautiful Italian brand called Barbarino's, which is very similar to the art of shaving, but with a modern Italian flair to it. They're the leading brand in Italy, and they came to us for guidance initially. And as they really plateaued in that market, because Italy is a small market, they realized that if they really want to create a global brand, they have to really come to the United States. So we decided to get involved with them, and we've helped them to bring the brand across the pond. We've started, and funny enough, the Art of Shaving was closing their last store on Madison Avenue, which we brokered a deal to take over for Barbarino's. And about a year ago, 6 days after the Art of Shaving closed that store, we took it over and rebranded it Barbarino, and the store is going to do probably $1.5 million in its second year. So it's got a great success track record already, and the American consumer are really engaging with the brand. So we're raising capital now. We're helping the brand raise capital and expand their presence in New York and eventually across the nation. So that's one example of how we're helping them. We're also reformulating all of their 20 products for men's skin and hair.
Where you mentioned a physical store, how much online business is really taking over these days with Amazon and
Well, online business is huge, obviously. But for brand builders like us,
Yeah.
It's becoming, in the last 4 or 5 years, it's become extremely expensive to build a brand online. So we're really adopting an omni-channel strategy where we have a strong online digital presence, a physical presence with our own stores, and we're selling to third-party retailers like Nordstrom's and Bloomingdale's. So
So,
creating a halo effect so that we're not dependent on just paid media, for example, and we can really expand brand awareness and expand our digital presence at the same time.
so Bob Marino's, for example, are you taking those stores and placing them in high populations where it's an experience type thing, and
Yeah,
then even a tourist could say, "Ooh, I mean, I'll walk in and
that's
I
right.
like that stuff," and then I can order it online when I get back
So
home if I want to.
the stores are very profitable, but they're a building block of brand building, right? So the idea is to really foster community, introduce the brand in its best light, and then really drive traffic and revenue through the website and through our third-party retailers. These products are repurchased, right? It's a recurring relationship with the consumer. They don't automatically have to go to the store. They can buy it online, but the stores are really built to offer a sensorial experience that's unique to Barbarinos, and that's what drives consumer to the store, right? Introduction. That's how we recruit a lot of our customers, is through the stores, and then we transition them online to repurchase products as they
You collect the
as
information, give me your email and your phone number, I'll send you discounts or all that good stuff. And
well, it's really building community, right?
yeah,
And having a physical store is a huge advantage, right?
yeah,
I mean, for Barbarino to build a million and a half revenue in 12 months online alone would have taken tremendous investment.
gotcha. And you get the experience too. You kind of control the experience that you want them to have
That's
by doing
correct.
it. Awesome. We're going to shift gears a little bit. Um, well, you're an angel investor, is that correct? Or offer angel investment?
Yes. I think that's what we call ourselves, angel investor. Yes.
Sure. Um, is that like I having a partner? You mentioned having investors and then they can input and you have
Well,
a partner. So I was just wondering how
I
the
had a I had a horrible experience with my investors.
okay, fair enough.
These guys were just predatory in their approach, and it was a win-lose relationship. So when I became an angel investor, it was really to support young businesses that often don't get this level of expertise. What we found in our career is that the main cause of uh, entrepreneur failure is due to lack of expertise in business or in their industry, usually in business expertise. So one of our thesis is that if we partner, if we invest in young enterprises that we understand well and within our world, we can disproportionately impact their success by helping them bring all that expertise, that firepower that they cannot afford to pay for at that moment. That is why we believe that our expertise is actually the greatest value that we invest. Um, we also invest cash, but cash is a small part, a small piece of what we invest in the
Sure.
business. And the old adage of angel investors is to spray and pray, right? But for me, it's more about spraying and playing. That's how I keep busy and engaged and fulfilled by being involved with driving multiple brands in our portfolio without the heavy lifting of day-to-day operations.
Gotcha.
And it's very rewarding.
Now, for my listeners, an angel investor, in my opinion, gives more input and, like you said, more coaching assistance versus a VC, what they call venture capitalist, which are more, like you said, they've done the calculations. They know how much money they can invest and the chances of you succeeding, and then the return on investment. They've done all that. Not that angel investors don't do that, but
That's
they
right.
don't put as much hands on. They're more about the bottom line. Let's make it happen.
That's right.
And if you don't succeed, then I know that because I already calculated it into my calculations. So
I agree. I agree. Angel investors. Was there a question besides that?
no, I just wanted them to understand where I was coming from and what that kind of meant. So my point being is, if
It
you're going to go
does.
out, an angel investor is much better than a venture capitalist, in my opinion. So
I tend to agree with you because I'm an angel investor, but also because, you know, angel investors tend to invest in earlier stages than the VCs, right?
right, they had
And
VCs had some numbers to go off of and do some
that's right.
calculations. Yeah.
So we invest in businesses that are half a million, $1 million in revenue or more, which tends to be a little low for VCs. So there's a higher risk to being an angel. And to mitigate this risk, we structure our deals differently.
Hmm.
But we also bring our expertise to the table, as you said, a lot of mentoring, coaching, and getting involved with, being hands-on in the operations. And that also reduces our risk factor by knowing that we're helping the founders make better decisions and avoid some of the pitfalls along the way.
A lot of my listeners are contractors, construction business owners that have experience in their market for many years. What's some ideas? And this is to wrap it up. What's some ideas on for them to look around and say, "This is my expertise. Can I create something that would help the population or a separate niche per se?" What kind of you have people brainstorm, look around, write the news?
Well,
I got the pad on at the bedside, and you wake up in the middle of the night and you write it down real quick.
yeah, I mean, there's a few things I would recommend. One is, what are you really good at? What do you do better than most people out there, right?
Hmm.
That's probably the kind of work there's a convergence of what you're really, really, really good at, what you're passionate about, and how you can make money, right? That's those three circles intersect. So what is there a void in the marketplace? Even if there's already people doing what you're doing, there's still room for you to build a business around that if you're really good at it. The other thing I would say is that you may have expertise in your industry, but you have the expertise in running a business and you have the stomach for it. I know some people that are successful entrepreneurs that just don't have the stomach for the uncertainty of it, right? You have to be built for it a little bit. It's uncomfortable. Are you that kind of person? And then what is it that you don't know? What do you need to find out to valid? What data do you need to make that final decision? But to be an entrepreneur, there's some pre-wiring, right? Not everybody's built. If you're really risk averse, you really like certainty in your life, you shouldn't be in business on your own. If you can handle some level of uncertainty, you like adventure, you like the challenge, you have cool nerves under pressure, you're maybe built to be an entrepreneur.
Well, there's a couple of things that I've learned, and part of it is, like you said, you talk about you look for companies that are a certain level of revenue, and maybe a person can get that company to that certain level, but not able to take it to the next step.
That's right.
And that's one of them. The other one is just because I'm good at running this type of business, whether it be plumbing, framing, whatever, general contractor, I'm not necessarily good at running this type of business. And I've
Yeah.
learned that the hard way sometimes. So anyway, Eric, thank you for your time today. And how would
Thank
people
you.
get hold of you if
You can
they
go to
had an
our
idea?
website. Yeah,
Okay.
ericmalka.com or strategicbrandinvestments.com. You can find us pretty easily online. You can also buy my book, On the Razor's Edge, on Amazon. Um, Tells the whole story and many, many good things to learn about for entrepreneurs.
And if you're looking up Eric's last name is Malka, Malka. And also, you can look in the show notes. You'll have those links and information about Eric. And finally, if there's something you enjoyed hearing today and want to discuss further ideas with me, get hold of Chris G here at the bottom here in the show notes. Click on that link, and we will make an appointment to talk. Eric, thank you very much.
Thank you very much, Chris.
All right. Bye bye.
Take care.